Welcome to Key Tech. Please describe this channel if you are interested in today's video. Recently, the price of gold in the international market has hit a new high. Against the background of turmoil in the global financial market, the surge in gold prices has deepened the outside world's concerns about the future of the global economy. On December 4th, the price of gold futures in the New York market once reached the $2,150 per ounce mark, setting a historical record. Some analysts speculate that this is affected by the Russia-Ukraine conflict and the Palestinian-Israeli war. But some people pointed out that this is related to inflation and the US dollar interest rate hike, or reaching a peak. As we all know, the US dollar plays an important role in the global economy. It is not only a means of supporting international trade, but also an important option for storing value. As early as 2012, the Federal Reserve announced that the inflation rate would be the policy framework for the US dollar, allowing the issuance of US dollars and interest rates to control the US inflation rate within a fixed range. If the inflation rate deviates from the set target of 2%, the United States will change the price of the US dollar through interest rate adjustments and open market operations to maintain the stability of US dollar hegemony. From an economic perspective, the United States is provoking the situation between Russia and Ukraine in order to disrupt the international situation and make the financial market more violent, thereby forcing international capital to flow to the United States. At the same time, the Federal Reserve raises interest rates to attract more international capital investment in the United States, thus ease its severe inflation crisis. However, although the United States continues to add fuel to the conflict between Russia and Ukraine, driving European capital outflows, these capitals are inherently seeking benefits and avoiding disadvantages. Not all of the fleeing European capital flows to the United States, but most of the capital flows to the Asia-Pacific region has greater development potential, especially the Chinese market. Therefore, the United States frequently manipulates Taiwan-related issues to create tension in the Taiwan Strait. At the same time, the United States has also roped in regional allies in the Asia-Pacific region such as Japan, South Korea, and the Philippines, and continues to create regional security tensions in the East China Sea and South China Sea. The purpose is to force capital from Eurasia to flow to the United States and accelerate the economic recovery of the United States. After the conflict between Russia and Ukraine broke out, the United States used its dollar hegemony to impose comprehensive sanctions on Russia. Half of the Russian central bank's international reserves of approximately $643 billion were frozen, and even the assets of Russian overseas companies were seized by the United States and Europe. The United States uses the US dollar as a political tool, and global confidence in investing in the US dollar continues to decline. In addition, as the Russia-Ukraine conflict and the Palestine-Israel conflict prolong, especially the United States printing a large amount of US dollars, countries around the world have begun to seek to purchase more gold. However, in response to the soaring price in the international gold market, German media revealed that China was selling US debt while buying gold, perhaps in preparation for attacking Taiwan. A German news website published an article saying that while China continues to sell off US debt, it is also buying gold on a large scale, perhaps in preparation for attacking Taiwan. Data show that China has purchased gold on a large scale for 12 consecutive months, becoming the top player in this year's global central bank rush to buy gold. The German media article also made a serious analysis that before the outbreak of the Russia-Ukraine conflict, Russia also expanded its gold stock on a large scale in order to have sufficient reserves in the event of a conflict crisis. With the lessons learned from Russia, China is also taking precautions to sell US debt and buy gold, or prepare to attack Taiwan, to ensure the stability of China's financial market and economic development after taking unified actions. According to Bloomberg, China's central bank purchased 23 tons of gold in October alone. Official gold reserves currently reach 2,215 tons, exceeding the combined total of Latin America, Africa, and India. The report also quoted a gold dealer in Singapore as saying that China currently spends at least $1 billion on gold purchases every month. Some people point out that the skyrocketing international gold prices are not caused by China's increased purchases of gold, but because the United States uses the US dollar as a political manipulation tool, causing the financial market to lose confidence in the US dollar's credit. According to public information, in the first half of 2023, 13 countries including China, Germany, the Netherlands, Turkey, and Poland successively shipped back their own gold from the Federal Reserve, with a total weight of 1,090 tons. The gold held by the Federal Reserve for global central banks has dropped to about 4,700 tons compared with the previous high of more than 7,000 tons. Industry insiders analyze that against the backdrop of the Russian central bank freezing some of its reserve assets, the increase in gold holdings highlights the concerns of countries around the world about the inherent risks of US dollar assets. At the same time, with the uncontrollable inflation in the United States and the accelerating global de-dollarization process, it is inevitable that global central banks will increase their gold asset reserves to replace part of their US dollar reserves, which means that the hegemony of the US dollar may come to an end. Currently, the central banks of major economies, including China, are still reducing and selling US debt holdings. China currently holds less than $800 billion in US debt. While China is selling off US debt, it needs to purchase more gold to maintain foreign exchange stability. In the final analysis, China continues to purchase more gold in order to reduce the negative impact of the United States' indiscriminate issuance of currency and the depreciation of the US dollar. This is purely a hedging behavior for financial market investment. In addition, countries around the world are also trying to reduce their dependence on the United States through other fiscal and monetary means, such as reducing their holdings of US dollar treasury bonds and increasing trade settled in RMB. In the future, the RMB may replace the US dollar as a new reserve currency. Therefore, China's reduction in US debt holdings and increase in gold purchases are not intended to prepare for an attack on Taiwan. However, when the hegemony of the US dollar ends, the hegemony of the US military will also collapse. By then, the mainland may be able to achieve complete reunification of the motherland without sending troops.